If you want to make a lot of money trading boom and crash, then this is the only video that you ever need. Because in this video, I will be covering everything that you need to know about boom and crash, from what is it that is boom and crash, what are the mistakes that you need to avoid if you want to make money trading boom and crash, and most importantly, I'm gonna give you the best strategies that you can use to make money trading boom and crash today. I will also leave timestamps so that you can jump from section to section of this video. And since I'm doing all this for free, it will be nice if you hit that like button and help this video reach 1 million views. So what is boom and crash? Boom and crash is one of the synthetic indices that are offered by Deriv to their traders. These unique indices mimic real-world market volatility and liquidity risk, just like any other financial market. If you want me to do a full course on synthetic indices for beginners, tell me in the comments below. So boom and crash moves in spikes and ticks. Boom and crash is just like any other market. If you think about it, if you go to the higher time frame, like the 1 hour time frame right here, you're going to see that boom and crash is just like any other market. But if you come to a 1 minute time frame, it's a little bit different from what other markets does, because in another markets we know that the market moves with impulsive moves and pullbacks, but in boom and crash we get small tick candles and what we call spikes, right? So there are 3 types of boom and crash. So the first one is called boom and crash 300, and the second one is boom and crash 500, and then we have boom and crash 1000. So boom and crash 300 makes 1 spike after every 300 ticks on average, and also boom and crash 1000 makes 1 spike in every 1000 ticks on average. So it simply means boom and crash 300 makes more spikes than boom and crash 1000, right? So there is one big mistake that I want you to avoid. Wait, before I give you the strategy to make money, let me show you this one common mistake that you need to avoid if you want to make money trading boom and crash. The biggest mistake to traders is to say, okay, I'm gonna come here and I'm gonna try to scalp 3 or 4, 5 of these small tick candles with a huge lot size right here. And then you think that if you do that, if you can do that 5 times in a row, I can make money in 1 week and become rich, right? And if you make this mistake, I guarantee you, you are going to blow that account. And let me show you why. You see, when you are trading on 1 minute time frame, you have to understand that each and every one of these tick candles is going to be worth 50 cents. And if you look at it, it's very tempting to just say, okay, I'm gonna come here and I'm gonna just try to scalp and get 3, 4 or 5 candles, tick candles from this market right here. So if you can do that, that simply means if I can put 10 lots, I can also get $5 per each and every tick candles, and I'm just gonna take 3 to 5 candles and I make $30 per trade, right? And if you're thinking about that, I want to shout at you right now and say, you see, when you are looking at the potential of making 50 cents on each and every one of these tick candles, you are forgetting about the spikes that are gonna come. And these spikes come at different sizes and different types and different times. It's just gonna come at any random point with any random different size, right? So for the 50 cents that you are trying to make with a standard lot, you might be risking $3 or $4 or more, right? Because each and every one of these tick candles is worth 50 cents, but how much is worth this huge spike that you can see right here? It's gonna be worth a very big amount of money, right? So when you put 10 lots to make $5 per tick candle, you are risking like $30 per spike on that trade, right? And the worst part is when this big spike comes, it doesn't respect your stop loss. It's gonna eat up all your money in the market. So trying to scalp the tick candles in boom and crash is not a good way of trading. It's not a good idea. Let me show you what is the best strategy to use when you're trading boom and crash using this 1 minute time frame. So this strategy that I'm gonna show you here uses this 1 minute time frame, but instead of trying to scalp these small tick candles, we are trying to catch the spikes, right? on the other hand, we are trying to catch the spikes. So to do that, we are going to use 3 indicators on our charts, and these 3 indicators is the RSI, the MACD, and the moving average, right? So first of all, we are going to go ahead and insert the RSI. Click on F, go to your main chart, and then you are going to put your RSI indicator. So I'm going to put my RSI indicator right here. So for the settings, I'm just going to put everything to default. Okay, I'm going to put the level to 15, and I'm going to put 15 and 85 for the levels, and I'm gonna put the color to black so that you can see it. And for the style, I'm just gonna put to the color of the background. So for me, I'll put white because I don't need to see the RSI line. I only need the RSI zones. So I'll leave it like this, and I'll click done. Right, and on my charts, I'll have the RSI right here. And also, I'm just gonna come back, and I'm gonna just put the MACD on top of the RSI. So for the MACD, I will set everything to default, right? Everything needs to be on default settings, and I'm just gonna click done. And then you're going to see that the MACD is now on top of the RSI. And then the next indicator that I'm going to put is the moving average. So if you really follow me, if you really like this channel, if you're a subscriber, you know what I'm talking about. You know this strategy, but I'm going to show you the best way to trade it in boom and crash. So just put period 2, method symbol, and then apply to previous indicators data. We want this to go on top of the MACD, and then I'm gonna put the color to blue. Let's put blue right here, and we click done. Once we do this, we are going to have this nice chart right here where we have the MACD, the RSI, and the moving average looking like this. So now to make money with this strategy, we are going to be trading, we are going to be scalping, but a little bit differently. So in this case, we know that we are never going to trade against the spike. So in the crash market, we are selling. In the boom market, we are always buying. So here's how it works. If you look at this, you can see that when the market moves on top, when the MACD and the moving average comes on top of the upper side of the RSI, which is the overbought, just like here at this point right here, you can see that from there, after that, you can get a spike coming up next, right? So you can get from this point right here, you can see this is this point right here. So what you do is you want to wait when the MACD starts going above the 85 line. Once the MACD starts going above the 85 line here in a crash market, you are going to be selling. Do not buy in this market. Whenever the MACD goes on top of the RSI here, right here, as you can see, you are going to be selling right there. As you can see right here, when the MACD goes on top of the RSI, you are just going to try to start buying. You might be asking, so why do I need the moving average? So the reason why you need the moving average also is when you get the MACD and the RSI to go on when you sell at this point right here, and then the market drops and then creates a spike. If you get that spike, right? If you get that spike, you don't. If you after you get that spike, when you get a crossover here after the spike, you don't exit. So because the crossover happened on this spike right here, you don't exit because you might likely get another spike again. If you see a crossover after the spike, soon after the spike, you don't get out of the market because you might be getting another spike. So in the crash market, you are always selling, and you sell when the market is above the RSI, and you might start seeing a lot of results. When it comes to the boom market, if I click here, go to the boom 500, we are going to be only looking to buy, right? So remember, you are not always going to make money every time, but most of the time you are going to make money. So remember, also I'm going to show you where to put your stop loss and your take profits right here. So once the MACD goes outside the RSI, don't hesitate to buy. Then you buy at this point. Then as you can see, you buy at this point right here, and then the next thing that happens is you get two spikes going to the upside, but you're only looking for the crossover to happen on the lower side, just like at this point right here. Once the crossover, once the MACD comes to the oversold here below the 15 right here, you start selling right here. So don't hesitate, because the spike might come as before you buy, so you just buy there. Right now, for the stops and the targets, right, it's very easy. Once you buy, make sure you count 5 to 7 tick candles. So if you buy and the market makes like 7 tick candles without going to your direction, without giving you a spike, then you want to exit into that market. You want to exit that market. If you sell and the market goes against you with like 5 to 7 tick candles, you want to exit that market with a loss, right? So for the take profits is easy. What you want to do is, if you buy on the lower side right here and then you start getting spikes, you still be in the trade until the MACD touches the upper side. So this way you can get a good risk to reward ratio. This is the only way that you can get a good risk to reward ratio on boom and crash right there. Right, so this strategy is very profitable, and if you can trade this strategy consistently, you can start seeing results in the market and you can start making money, just like what I do sometimes, making money with this strategy. But I'm not saying this strategy is gonna win 100% of the time. No, I'm not saying that, because there's no strategy that is gonna do that. But this is a very good strategy to scalp boom and crash. The best thing to have with this strategy is have patience, and make sure that each and every time you open the market, you wait for your opportunity to come. Don't rush into trades. Don't change the zoom level trying to get the trade as fast as possible. Do not do that. In our Forex Mastery Bootcamp, I talked a lot about what's the importance of having patience in the market, what it does to your trading plan, and what it does to your trading in a long run. So if you want to join the Forex Mastery Bootcamp, I have the link in the description. It's not going to take you to the bootcamp directly. It's going to take you to me, and then I'm going to talk to you first, and then you are going to go to the bootcamp later on. Thank you for watching, and I'll see you in the next one.